Welcome back to Editors Roundtable. It's been a phenomenal run for the market in the last 1 week. In the last couple of weeks, actually, continue to sit at record highs. A lot of milestones have been scaled out, and we have Harish Bihani here with us to tell us how to approach the markets here on. Harish, one sector that has been in focus for the last many weeks is telecom. After that much-awaited tariff hike has come through from Reliance, then from Jio, then we went on to Bharti Airtel as well. And these are stocks that have given great returns to shareholders. Do you think that there's more to go in the telecom space?
Absolutely. This is a part of the repair cycle in this particular sector. The capital cycle is in favor. There are only 3 companies in the sector effectively. Second is that all companies have decided to focus on profitability, balance sheet and cash flows. And this is the beginning. So there's more to go. As you would all know that Reliance Jio should list. We don't know the timeline, but it should happen. And if that happens, then the repair of the sector, the balance sheet repair should continue. And with that, the earnings will continue to move up. Will it be similar tariff hike versus what we have seen about a week back? It seems highly likely to us. So telecom seems a fairly decent sector to invest in at this point in time.
Harish, coming back to that point on the small and mid cap, you spoke about big opportunities for some companies which can become very large. I know you can't talk stocks, but if you can just give us some idea on the sectors which you are bullish on, which are the big total addressable market where you think there could be large opportunities. Somebody was pointing to QSR as a big space. If you can just identify 2-3 sectors for us which can be really big over the next few years.
Absolutely. So first is very simple, healthcare. Whether you look at the hospital companies or diagnostic companies or domestic facing pharma companies, which are small in size, as India graduates from a $3.5 to a $10 trillion, we'll need many hospitals, many diagnostic companies. And the bandwidth of the existing diagnostic and hospital companies need to increase significantly. And the profit pool, if you look at the existing profit pool in these sectors, it's extremely good. And there's no reason to believe that the profit pool will come down in these segments. You spoke about QSR. In a country like India, which will become very big in size, there will be at least 2 players which will become very big in size. You look at the entire auto ancillary space, especially the auto ancillary names in the small cap space. We have been very bullish over there across our funds. And they are behaving very similar to engineering companies now. They have diversified their product basket. They're getting into engineering areas. And we have seen significant re-rating in these names. And that should continue as we speak. You're looking at the entire capital goods names, although the valuations are elevated at this point in time, but there are niche pockets in the manufacturing capital good names that are looking good to us. You look at the entire infra basket. You have specific names in the infra basket that aren't very expensive, very constructive over there. So many opportunities keep emerging. We'll have to work harder, keep looking out for such opportunities in a market like these.
For somebody who's watching, Harish, and wants to put money, does a small cap fund make sense, or like a multi-cap or a multi-asset fund make more sense? What's the recommendation?
No, it's very clear, Prashant, that we'll have to think through on the time horizon that we are investing our hard-earned money in. The longer the time horizon, you could invest in any particular pocket where volatility will be very high in the near term, but it evens out as we lengthen our time horizon. So if you take a pure equity bucket of small cap, mid cap, flexi cap, multi cap, you need to have a much longer time horizon. For something like a balanced fund, which can take calls on market, can increase the equity allocation up and down. Those are areas where you should invest in lump sum in a markets like today, so much more versus what you would do in a pure equity fund, especially in the mid and small cap bucket, where valuations have moved up higher. So that is what we have been suggesting to all our investors.
All right, Harish, request you to hold that thought. Well, Nimesh, at the start of the show, you teased us. You said there is some relation between the markets as well as cricket. We want to know what's the data you're throwing up.
Well, it's a very interesting data. Even I mean, it was a kind of an eye-opener for me as well. So the first, big win was in 2007, right? The inaugural T20 World Cup, which we won. The Modi, the whole team was such a first-time kind of thing, right? But if you look at the market returns after the win, I just looked at 3 months, 6 months, and 1 year period. In the first 3 months after the 2007 World Cup win, the markets were up 18 to 21%. I'm talking about Nifty and Sensex. 18 to 20% rally in the first 3 months. However, in the next 6 months, over a 6 months period from the election win, the markets were down between 7 to 9%. And over a 12-month period, the markets were down between 15 to 18%. So that was the kind of correction we saw in 27 after the World Cup win for India. Now coming to 2011, which was a 50 World Cup in Mumbai, it was something I was witness to. But look at the data after the win. Over a 3-month period, the markets were down 3.5%. Over a 6-month period, the markets were down 15%. And over a 12-month period, the markets were down 10%. So on an average, over a 6-month and a 12-month period, over the past 2 instances, we've seen between 10 to 20% kind of corrections in the market. Will history repeat? Only time will tell. But as even Prashant pointed out, we started the last 1 month, we've seen a rally between 10 to 24% across all the indices. So we've seen a long, pretty hard rally in the markets. Historically, the last two instances have suggested that over a 6-month and a 12-month period, markets, the periods are quite tough and we give negative returns. So need to see how, post the 24 win, how the next 6 to 12 months pan out for India. But history suggests that we've seen a very tough period for markets in the 6 to 12 month period after we win the World Cup, the 2020 or 50 World Cup.
On the cricket aspect, it also suggests that we'll win the 50 over World Cup in the next 4 years. So look at it positively.
Well, let's just hope this time history doesn't repeat itself, right?
So, yeah.
But tough period can also mean consolidation. Well,
Yes.
in any case, Harish, just one final word from your end before we, end the show. This is an important month because we have the budget coming up, right? And this time around, I think the government has some flexibility because of the higher RBI dividend, because of the higher tax collections, etc. Do you think there are some stimulus measures coming, some perhaps populist measures as well? And what would all of this mean from a market standpoint?
I think that's a popular consensus, Sonia, that there will be some kind of a stimulus, and which is where you've seen rural-facing companies doing well in the past 15 days or so. That said, when you think about on average, what could be the kind of stimulus and will it have a significant impact on the overall market, it seems unlikely to us. There'll be specific companies, specific pockets that should do well. There will be on average, we think that the pace of the reforms that the government took in the past 10 years, that pace of reforms will continue. There'll be more allocation towards capex-heavy sectors. So that will continue. There might be higher allocation to the consumption basket or to certain areas where money is required at this point in time. It doesn't change in aggregate. It doesn't change the overall market environment significantly.
Okay, all right. Well, on that note, we are going to call it a wrap on this edition of Editors Roundtable. You guys have a great weekend. Of course, we're still reeling under the World Cup win and, that whole bonhomie continues. But stay tuned as news continues right here on CNBC TV18.